Want to retire early? Have you thought about an HSA? So today we're going to be talking about how to maximize your HSA to hopefully push you towards that early retirement goal. Now, we are licensed health insurance brokers, so if you have any questions whatsoever, you can reach us at the number on the screen or in the comments below. And of course, there is no charge for our services. And please don't forget to like and subscribe as well. So what is an HSA? Well, an HSA is a health savings account, and it's actually your own personal account with your money. The amount that you contribute is pre-tax, so that means it's going to lower your taxable income. Therefore, you could possibly receive a larger refund, or if you're somebody who has to pay taxes when you file, at the very least you might be able to pay a smaller amount. And every year the IRS sets the maximum that you can contribute that year towards your HSA, depending upon whether you're considered an individual or a family. This page is on irs.gov, and it details the maximum contributions to an HSA for 2024. So if you're looking to contribute to an HSA in 2024 and you're doing so as an individual, then the maximum contribution is $4,150. And if you're looking to do so as a family, then the maximum contribution is $8,300. Now, of course, you don't need to meet the maximum. You can contribute less than that, but the more the better for purposes we'll discuss later in this video. HSAs offer what's known as a triple tax advantage, and we've already covered the first of the three, which is that contributing to your HSA lowers your taxable income because those contributions are pre-tax. As I also mentioned earlier, HSAs are just a type of bank account, and those bank accounts are interest-bearing. So the second facet of that triple tax advantage is that interest accrued on your account is also not taxed. And there's actually a way to really take advantage of this that we're going to talk about later in the video. And finally, number 3 is that as long as you withdraw the funds for a qualified medical expense, then there is no penalty or taxation on those funds as well. And the list is quite extensive. This full list is known as Publication 502, and it's available on irs.gov. I'm not going to go through this full list because it truly is extremely extensive, but just know that you can use your HSA if you need to go to the doctor for copays or coinsurance, if you need dental work, if you need vision or hearing care. And I'm going to go through some of these, less expected ones just so you can see how truly extensive this list is. So obviously things like your annual physical examination or really any examination are covered. Braille books, breast pumps, capital expenses. This is very interesting. If you need any sort of modifications to your home to accommodate medical or disability needs, such as exit ramps, widening, or modifying hallways, that would be covered by an HSA. Let's keep scrolling down, including modifications to your car as well. Chiropractic care, which is not usually covered by regular medical plans. As I mentioned, dental treatment, contact lenses, eye surgery, even fertility enhancement. And very often medical plans, don't cover any type of fertility treatments. Keep scrolling. Hearing aids, of course. As I mentioned, home improvements, that would be under those capital expenses. Now, one thing that is not going to be covered are insurance premiums. So you do have to continue to pay for your insurance premium, and you cannot withdraw from your HSA for that. Keep scrolling down. Even unused sick leave to pay for those premiums. Lead-based paint removal. Like I said, I'm just covering some of the ones that you probably weren't expecting. Qualified long-term care services, that's very important because that can be very expensive. Even lodging if you need to stay someplace for medical expenses, medical conferences, meals at a hospital if you need to get medical care, operations, of course, those are the things you're probably expecting to be covered or that would be considered a qualified medical expense. Seeing a psychologist, even a television, transplants, of course. Let's keep scrolling. Weight loss programs, which are often not included in your health insurance benefits. Even a wig if it's recommended by a physician. So truly, as I said, the list is extremely extensive. I didn't even mention that, of course, prescription drugs are covered, but even over-the-counter drugs are covered. So even if you need to go to CVS to grab a bottle of Advil, you could use the funds in your HSA for that. So there really is no shortage of things that you can use your HSA to pay for if you are concerned about actually using those funds. But we're going to talk in just a minute about why you might want to leave those funds alone and why that might help you to retire early. So if this sounds good to you and you're wondering how to utilize an HSA, well, first you need to learn about HDHPs, which are high deductible health plans. Like with your HSA maximum contributions, every year the IRS sets a minimum deductible for a plan to be considered a high deductible health plan. So in 2024, the minimum deductible for a high deductible health plan, in order to be considered a high deductible health plan that can offer an HSA, for an individual is $1,600, and for a family plan, it's $3,200. However, that is just the minimum deductible, so it doesn't mean that it will just be $1,600. It can actually be all the way up to the maximum out-of-pocket maximum for that year. And in 2024, the maximum out-of-pocket maximum as set by the IRS is $8,050. And for a family, it's $16,100. So that means for a high deductible health plan to offer an HSA and be considered a high deductible health plan, for an individual, the deductible can be anywhere between $1,600 to $8,050. And for a family, it could be anywhere in between $3,200 to $16,100. And in all honesty, they tend to be on the higher side, which we are going to see in just a moment. So as you've seen, the high deductible health plan name is pretty indicative of exactly what it is. And your employer may actually offer you a high deductible health plan with an HSA as a benefit. They may even contribute to that HSA. So that's just like an extra little bonus. Now they're probably doing this because plans with higher deductibles tend to have lower monthly premiums. And under the Affordable Care Act, if your employer has more than 50 full-time employees, they must contribute towards at least 50% of the monthly premiums. And there is an inverse relationship very often between premiums and deductibles. So usually a plan with a higher monthly premium will have a lower deductible, and a plan with a higher deductible will have a lower monthly premium. So by offering you a high deductible health plan, your employer is likely saving money on those premiums, even if they're willing to contribute to your HSA. Now, if you're self-employed or work for a smaller company that doesn't offer health insurance, you can still take advantage of high deductible health plans and HSAs either through the marketplace or private insurance. But there's definitely something important that you need to know. So I'm currently looking at plans that are full priced, meaning no premium tax credit has been applied. So please do take that into consideration because most people who apply for a plan through the marketplace are eligible for some type of premium tax credit. So it's likely that the premiums that you'll see will be less. So I'm going to scroll up here where we're adding filters. And what I'd like to do is just click here where it says eligible for an HSA. So of course it has severely decreased the amount of plans available. But here's what I want to show you. So this plan offers an HSA. The deductible is $6,200. So that's significantly more than the minimum deductible to be considered a high deductible. And that is something that I mentioned earlier in the video, that even though the minimum for an individual is $1,600, it's likely that it's going to be higher than that. And this is the out-of-pocket maximum, of course. And I just want to scroll down to look at a couple. So this plan, the deductible is the same as the out-of-pocket maximum, which I did mention as well. Basically, it's the maximum minimum deductible. Let's take a look at some of the other plans. It's the same here, but it's a slightly lower out-of-pocket maximum, and here as well. So HDHPs that offer HSAs are definitely a great way to save money and possibly make money. However, high deductible health plans are definitely not for everyone. And it's funny because it really does work best for people at the opposite ends of the spectrum. You're best served with a high deductible health plan, either if you're someone with very, very limited basic medical needs or someone with extensive and large medical needs. So for someone with more limited basic medical needs, you'll enjoy lower monthly premiums with that high deductible health plan and of course that HSA, but still have access to basic services like preventative care, vaccinations, and prescriptions. You'll probably never meet your deductible, but at least you'll have access to those basic services with that lower monthly premium. And of course the HSA, which is the topic of today's video. Now for someone with more extensive medical needs, you'll probably meet that deductible pretty darn fast. And very often, as you may have noticed earlier, for some of these high deductible health plans, very often the deductible is the same as the out-of-pocket maximum. So once you've met that deductible, you're probably going to have met your out-of-pocket maximum as well, at which point your insurance carrier will take on the remainder of those covered in-network services for the rest of the year. Now, if you're someone who falls somewhere in between, maybe you regularly use your insurance to see specialists, or you're somebody with younger children who tend to get sick much more frequently, then maybe a high deductible health plan isn't the best way to go. Try to take a really strong evaluation of what your yearly medical needs might be before you decide to enroll in a high deductible health plan, even if an HSA sounds really appealing to you. Now, if you've hung on this long and you're still really interested in an HSA, let's talk about how to maximize those benefits. So we've already covered the triple tax advantage of the HSA, which is great, but it's probably not going to enable you to retire early all on its own. But did you know that you can actually invest a portion of your HSA account? And the earnings on those investments are not taxed. Let's break it down. This calculator can be found on mybenefitwallet.com. So we are not financial advisors. I would highly recommend, if you are interested in an HSA for financial benefits, that you work with a financial advisor. But I just wanted to take you through this calculator to give you an idea of how you can invest with your HSA. So first, I'm going to click on family as opposed to single, because if you are enrolled in a family plan, then you can contribute up to $8,600, which obviously is going to give you a lot more to play with as far as investments. Remember, you need to keep at least $2,000 in your HSA, and the rest can be used for investments. Now let's put that you're going to retire in 30 years. Okay? And we're going to do... It's going to let us do $691.67 per month. I guess that's because that will take us up to our yearly contribution. We're not putting in any healthcare expenses because this is what would happen if you were strictly using your HSA as an investment tool. So you're not really going to withdraw for qualified medical expenses. This is just if you want to use an HSA for that triple tax advantage. For annual rate of return, I put it in 10% because that seems to be about the average for the annual returns for the S&P. And this is what it automatically populated for marginal tax income rate. So you can see that with all this information put in, if you were to continue to contribute that $691.67 per month for your family plan, and of course, you could potentially contribute more because it does tend to increase on a yearly basis as far as what the maximum contributions are, then after 30 years, you could have $1,438,184.39. So you can see how contributing to an HSA could certainly help you to retire early. Now that's, of course, if you have that kind of cash on hand that you are able to invest. If you were going to do less, of course, it's going to be less. So I just put in $250 per month, which is a significant difference, but that would still leave you with $519,823.18, which is still $500,000. So obviously contributing to an HSA can certainly have major financial benefits. So if you're using your HSA primarily as a wealth building tool, remember, you don't have to use those funds on a yearly basis. They will roll over from year to year and continue to accrue interest. However, you won't be able to actively continue to contribute to your HSA if you're not enrolled in an HDHP. So if this year you're enrolled in an HDHP, you could of course contribute the maximum HSA contribution, but if you decide to switch to a more traditional health plan next year, you would still keep the funds in your account. They're there as long as you need access to them, but you won't be able to actively contribute to it. The good news is those funds will still be there and continue to roll over year from year. And if you hold on to it until you're 65, you can convert it to a basic retirement account. And if you are fortunate enough to retire early before then, you could of course leave it alone, continue to invest it, or pull from it for qualified medical expenses. So are you someone who uses an HSA? Have you found that a high deductible health plan works for you and your family? Let us know in the comments below. And of course, if you have any questions, you can reach us there or at the number on the screen. There is absolutely no charge for our services. Thank you so much and have a wonderful day. Bye-bye. If you are planning on retiring early, make sure to check out this video to learn all about your early retirement health insurance options. And please don't forget to like and subscribe. We'll see you next time.